Well, most Asian shares were softer today after North Korea conducted its fifth and most powerful nuclear test, heightening geopolitical tensions in the region at a time when investors are grappling with slowing global growth. Now, uncertainty over the prospect of further easing from the European Central Bank pressured global equities and bonds. So let's take a look at the numbers in the East. Japan's Nikkei ending flat in choppy trade, but Hong Kong stocks were lifted again by inflows from the mainland, helping the benchmark index have its best week in nearly 2 months. The Hang Seng index rising by 0.8%. Mainland China stocks falling after August inflation data provided few, if any, incentives for authorities to ease monetary policy. The Shanghai Composite down 0.6%. The picture in the United States, well, U.S. stocks dipping yesterday. They were dragged down by Apple after its iPhone 7 failed to impress Wall Street. But gains in energy shares limited the decline. The Dow Jones down 0.2%, the S&P 500 losing 0.2%, and the Nasdaq Composite dropping by 0.4%. Okay, details now on what's going on the global markets and here locally. Let's just start with Europe, Nompo. I see some weak trade numbers coming out of Germany.
Yes, that's right, Devon. Those weaker trade numbers out of Germany, which is the largest economy in the European Union, caused a little bit of fright in those local markets, European markets. We see those down at the moment, especially the German DAX. That's down slightly. Obviously, there'll be concern about whether the ECB did enough yesterday, given the fact that they decided to keep things unchanged and Germany showing signs of weakening. But the question mark is obviously how much more can the ECB do, given that it's already spending so much money in terms of buying government bonds as well as corporate bonds, and in some instances already has interest rates in the negative. So that's the one thing. And then here at home, we see that the all-share index is in positive territory. But the rand, however, is really losing a lot of ground right now, hovering around the 14.30 mark vis-a-vis the dollar, and it's just gone through 19 against the pound. So some weakness there. So there must be some sort of general risk aversion that's going on. And globally, we're just seeing markets really just volatile. One day they're up, one day they're down. Let's take a look at the indicators. Well, I've got Warwick Lucas. He's joining me from Galileo Capital. He's the Chief Investment Officer there. Thank you very much for joining us, as always. Good stuff. Volatility can be perceived as a negative thing, but I suppose for people like you, it's a positive thing because it gives you the opportunity to buy some stocks on the cheap. Why are the markets so volatile?
Yeah, I think there's two factors that have come into play here. You know, the last 2 months after the initial shock at Brexit, and then we had a huge rally after that where suddenly it was all risk on again. And we're now getting to the stage where I think that sort of enthusiasm is first of all fizzling out back into a risk off anyway, and also we're coming to a quarterly futures closeout where you always find that whatever was the primary direction tends to get reversed a little bit at the end of the quarter. So I would expect another quiet week next week on that particular.
And then specifically, just looking at Europe, obviously, with the ECB having decided to do nothing, so to speak. I remember when Jill Marcus was Reserve Bank governor, she used to say when interest rates were left unchanged that the Reserve Bank had not done anything. It's actually done something by keeping things stable. So from the ECB's point of view, they probably have done something, but the market doesn't perceive that to be so. And when we look at what's happened with the German trade figures, do you think that they've done enough?
Well, I mean, they're in a bit of a difficult position as to what else can they do. I mean, in terms of dropping interest rates, well, I mean, they're already in negative interest rate territory, and it's quite questionable as to whether negative interest rates will really achieve anything. So the only alternative is to push more liquidity into the system, and that certainly runs up against some fault lines within the EU structure itself.
And in terms of the European markets right now, we see them in the negative. Is that simply because of the ECB decision?
I think, as you also mentioned, some trade figures also looking a little bit wobbly there. I mean, we're looking for a bit of growth in Europe now and a little bit of inflation, and it's just not coming through.
Okay, on to commodities now. I saw a report saying that there's been a $51 billion investment in commodities for the first 7 months of this year, which is a real positive, and it's the biggest investment since 2009. But I suppose one of the tricky things about that is that a lot of the money that's going into commodities is speculative as opposed to long-term type of pension money.
Yeah, I mean, you'll find a certain amount of that happening on the Chinese commodity exchanges, which are very large indeed. But I think we need to contrast that against the tail end of last year, where we saw massive destocking. And that, I mean, that saw commodities falling to multi-year record lows on the back of that. So the key thing is, well, is production and demand coming back into line with each other? And I think we're starting to see that. So, albeit the commodities are low, it's a more encouraging picture.
Okay, all right. And then let's look locally at the SA Rand. We see, obviously, it's lost a lot of ground given where it was yesterday. What do you attribute to this?
I wouldn't attribute anything specifically today, but today is a long day, just as a week is a long time in politics. So, of course, we head into the weekend where all sorts of news can possibly come out on the Sunday papers that you weren't expecting. Sometimes with the currency, you find out what you should have known 24 hours before.
Indeed. And also interesting to note that the CEO of Future Growth, Andrew Cantor, has apologized to this state-owned enterprises for not having approached them directly himself before making the announcement that his company is going to withhold funds from certain SOEs. But having said that, he's still going ahead with his investigative process of ensuring that they are fit and proper to accept funds from Future Growth.
Yeah, it's a bit of a difficult one for managers in that position, because the politics can wind up clouding the business issue at hand. But nevertheless, these days, we find in the situation that right now the politics is actually part of the business issues. So they become intertwined. And I think that was a place where Cantor misstepped, certainly politically, but in terms of his duty to his investors, not so. I mean, we've seen some poor operating results out of state-owned enterprises anyway. SA in particular, we see gems under pressure. I mean, state-owned enterprises should be paragons of, shall we say, fiscal stability. We're not seeing that.
Mm-hmm. All right, and then lastly, next week on Monday, we have MTN coming out with their MTN Zakhele sort of reruns, if you want, shares, where they sell shares to black shareholders. That's for 20 Rand a share, but you have to make a minimum investment of 2,000 Rand to buy 100 shares. If you were black, would you buy the shares?
Bottom line, because it's underwritten or shall we say subsidized by MTN with an effective 20% discount, absolutely yes. I definitely would.
So it's a no-brainer?
I would say it's a no-brainer. Look, there's risk as there always is, but I think MTN is actually looking towards a brighter future. I think there's been some very positive management changes, a very dynamic new CEO coming in next year, who comes from the competition nogal. And I think broadening the shareholder base, I think that's a good idea. I mean, certainly a broad shareholder base in Nigeria could very well have wound up saving them from the political caning they took there.
All right. Well, thank you very much for your insights as always. Well, there's a thumbs up from Warwick in terms of the MTN Zakhele shares that are going to be issued as of Monday. Thumbs up there. So if you are a black prospective investor, something worth thinking about, you need a minimum of 2,000 Rand to invest in that. After the break, Devon has more business news for you.